Hello, everybody. Let's give a quick check to make sure we are live on X. But today we have a fun one. Yes, we are live. Bittensor longing and shorting, Zipcode, RWA vaults, and more. We are joined with the one and only Kyle Jacobs. There's only one Kyle Jacobs, as far as I know, and he's here. Kyle is the COO at Zipcode. He's also somebody that I've been working with for years. We started working at Alpha Growth. And through these experiences, I've learned, I've understood Kyle to be the greatest DeFi mind that I've encountered. So not to toot his horn too much here, but yeah, that's why Kyle's here. Because you guys understand the preface is we're going to talk about longing and shorting, right? You've had people like Al God and Const going at it and other people talking about many different features. I think that longing and shorting was a topic that was touched on. And then we were just like, let's trust Const. And I totally agree. But we want to dig a bit deeper. I think that there's a lot of excitement here, a lot of things that you should probably prep for as a trader in terms of circumstances that you probably didn't think of that could happen. Kyle and I are going to uncover those, what those mean for each stakeholder, a subnet DTAO trader, a subnet owner, a validator or a miner just providing infrastructure and trying to pay their bills. What does this mean for all of these people, if anything? And we're going to go through it. Then we're going to go into Zipcode vaults. But let's start, Kyle, with a bit of an overview. Let's go into longing and shorting. Where would you like to start? Oh, I lost you, Kyle. Oh, no. Got to message Kyle. Unless you guys lost me as well. If so, somebody telegram me. Yep. Kyle is frozen. Hey, Kyle, if you can hear me, please exit and rejoin. And he's doing that. Great. Okay. Kyle is rejoining, exiting right now. And we'll get right back into it. Give me 1 second here, guys. Let's see if we can remove. Okay. So it is just me for now. I'm going to add somebody in shortly, which is Kyle. You could probably still see him here. But yeah, long and shorting. Let me give a breakdown. Oh, I got Kyle calling me. Hey, are you able to rejoin? Cool. Yeah, I'm just gonna wait for you in here. Cool. All right, longing and shorting. The long story short is that Bittensor is doing something that's completely unique from any other chain. Let's talk about it at a structural level first. This was kind of where I was pointing Kyle to go. Sorry about that delay, guys. But longing and shorting on Bittensor is insanely impressive, even as an idea, because the structure that allows longing and shorting on other chains is completely different. Let's talk about it. On another chain, say Solana, you're going to have your DEXs, right? Your concentrated liquidity pools and automated market making pools. Those are the different types of swap pools people use to swap in and out of tokens on Solana. You have protocols for this that manage these LPs, and there's plenty of them. Some names that ring a bell are like Orca, or one, and then Pump Fund itself, right? There you have LPs in there, and then it graduates onto, I want to say it's like a Orca or a Meteora type of platform. But you have exchanges, decentralized exchanges. Then you have lending platforms. These lending platforms, they really do allow longing and shorting, right? Because you're able to deposit a collateral and then borrow something different, and then either lever up or go the opposite way with leverage. And it's a really simple architecture. It's what enabled DeFi Summer. This whole like, hey, we have a chain. This chain has protocols. These protocols raise a bunch of money from investors, and then they all have fragmented liquidity. The story of crypto is the most fragmented liquidity of all time, which is why centralized exchanges become so important, because they can like be this hub of liquidity. It's like a liquidity, hub. Yeah, that's it. So with that type of structure, you have fragmented liquidity. It's entirely inefficient. On Bittensor, you have a completely, this is a complete opposite structure. One, you can't deposit into the LP pools. I say as an investor, cannot go put Tau and Zipcode tokens into a pool and provide liquidity for my subnet. I mean, no subnet owner can do that. That's by design. Okay, so Bittensor has this pool. What we're talking about is the fact that this pool has been used for swaps for a very long time, the whole time. DTau is basically just swap in and out of Tau and Alpha. Now there is a mechanism that uses that same liquidity pool for what is borrowing and not lending, but what is borrowing. And so with borrowing, you can go long or short on Tau or Alpha. You can't do this with USDC, mind you, right? These are entirely Alpha and Tau relationships. But the implications are huge. The amount of risk that you can take is going to be great for some, horrible for others. So as we wait for Kyle to get back, what I will say is that we don't have any stance right now, other than the fact that we want to see the chain implement this in a successful way. So if it means, Kyle spending time, then so be it. We're going to go test this thing out. We're going to go build the treasury strategies, and we're going to implement that across all of Bittensor. Let's get Kyle back in here. Okay, good. So his internet died. His internet has since come back, and now we are proceeding. All right, let's let him come back in. Give me one moment here. Cool. We got Kyle joining back in. I have to let him in. Sorry, everybody. We will be rocking and rolling in one moment. As you can tell, this is live. This is actually live. All right. Sorry, guys. 9 minute at the 9 minute mark, and we're still getting started here. For anybody joining, this is Bittensor longing and shorting, the implications for subnet owners, subnet traders, whoever the hell you are. The pool, the one thing that we interact with across all subnets, or each pool, is being affected. This is good. This is bad for some. And I think that we should just understand it and start this conversation. It's a very complicated feature. And what I've seen is that the community has basically just kind of like pushed all the conversation into a super technical arena, where a lot of the traders are not technical. They understand mentality. They understand the human. They're playing the human game, and that's why they're good traders. But we are going to distill that conversation. once we get Kyle back in here. Let's give him a call. We are calling Kyle. No answer from Kyle. Okay, he's typing. This is live. I'm telling you guys. Oh, and he's calling back. Hey, what's the issue? The what? Snipered your what? Oh, your internet's still dead. Yikes. I mean, just jump into, click the link from your phone and then just go off camera. Yeah. Cool. He clicked it. Let's see if he can come in via phone. This is exciting. Keep you guys on your toes over here. You don't know who the guest is. You don't know how the guest is coming in. Like, fuck, I don't know either, but that's besides the point. But yeah, guys, this is definitely worth the wait. I will tell you that, more context on Kyle, because we're just going right into things. This is somebody who worked with me at Alpha Growth. One, an amazing writer, first and foremost. He came in to be a writer, ended up, overstaying me at Alpha Growth, and we turned into a financial strategist, essentially, an asset, strategist, all these vaults and financial products that were being produced by Alpha Growth. Not all of them, but the ones that Kyle was on and had responsibilities on. He that was his thing, right? If you were a chain and you had a treasury, or if you were a protocol and you had a treasury, or if you were a chain and you needed to make a case for investors to deposit capital into your fragmented liquidity sources, such as the EVM and SVM ecosystems, then those need to be sold, right? Those are, hey, we have a 10% yield for X amount of time on this platform, which is on this chain with these assets. Do we have any takers? So sourcing liquidity, which is essentially what we're doing with Zipcode vaults, right? We created this vault. We are offering a yield. That yield is going to be long-term, a very trustable and conservative, 6 to 8 to max 10%. And as we converge to really like this 8% point from real world yields, you have something that is like perfect to go and sell real institutions, real world asset backed credit products. Oh, and we have a Kyle back in the stream. Kyle, here we are. Go off camera. Oh, actually, your setting looks fine. If it's tough on your audio, though, we'll get you in. But here we go.
Okay.
Welcome back. Yeah, probably go off camera, but let's test your audio.
Hello?
Hello, sir.
Hi.
All right, let's go right into it, man. I gave a huge preview on longing, shorting. There are implications. We haven't talked about them yet. What I did talk about while you were gone is that Bittensor is structurally different. One, you can't deposit into these liquidity pools. And two, you're sharing liquidity across swaps and borrows. So that's an innovation within itself. It actually makes the entire chain and every subnet more capital efficient. I don't have to go and make one pagers for LPs and offer them a bunch of my tokens to incentivize 20% on USDC Zipcode tokens and spend the 3 months it takes to build up those pools. Right? I don't have to do that. I also don't even have to input any liquidity at all. I can just
Yeah,
access it and serve my investor base. So yeah, please, Kyle, with that understanding, go ahead.
yeah. So what it looks like Bittensor has done is they've turned their existing pool, the Tau Alpha pool, into the counterparty for leverage accounting or perps.
And what counterparty? I want to use simple words here, Kyle.
Yeah.
Counterparty is just, hey, there is this box. It has money. You're going to interact with that. But please continue.
Yeah, so let's just talk about shorting, since that's what's going to be available, like shorting and hedging right away. There's a thing in money markets, which is how I'm understanding this. You have something called a short sell. And that short sell, you put in some dollars, and then you borrow a token, you sell the token, and then say the token goes down, and then you repay the debt, which is the amount of, say you borrowed 100 tokens and then sold them, and then the price of the token went down. You still owe 100 tokens, but the token that you pay back is less expensive. So your profit is the difference between when you sold the token and when you paid back the token. And so that's your P&L if you're shorter. What it looks like Bittensor has done is you deposit Tau, right? You can borrow up to, say, like half of that Tau in alpha tokens. The person you're borrowing from is the pool itself. And then the pool itself sells those alpha tokens at that price into itself, right? And then that gives you some Tau. And that Tau is sort of like what your debt has turned into. And it's also how long your position can stay open.
Right, because it's constantly decaying.
Yeah, that's correct. And so you have like sort of, you say you deposit like 100 Tau and you want to short Zipcode, so 50 Tau of that stays in like a settlement fund, and then 50 Tau of it is in a decaying thing. Like, how long do you want to hold this for? And you can hold it, it's like a certain rate that's set, and then that rate just basically sells that Tau or uses that Tau to buy Zipcode. It feeds it into the pool. You're contributing your Tau into the pool in this way. You exercise your short sell in the beginning. This causes this Tau to exist, and it creates like a marker. Am I P&L positive or P&L negative? Positive means Zipcode price went down since you bought. Negative means Zipcode price went up since you bought. When you want to close the position, I think what happens is that this P&L is settled against your initial 50% half that's not touched by anything. And then, if you win, you get more Tau. If you lose, you get less Tau. And you also have to pay for the amount of time that the position was open. The benefactor of all of this is the pool itself. So the pool is winning because it's getting trade fees. The pool is winning because it's getting a funding rate. And and Tau is winning because they're sort of forced pressure. It's like doing things.
Yeah.
Doing things and earning fees. Yeah.
Okay. So let's go through some circumstances for traders. Before we go into subnet owners, maybe how do you see this as someone who has a lot of experience trading and market making? Kyle, what are like these patterns you look for, considering you now can assume this to be in your trader toolbox on Bittensor?
Yeah. So there's a few things to note here, and there's spec differences or word differences. And the idea is that there are no liquidations in this, and there would be no short squeezes. And this is incorrect, in my opinion, because there are forced closures. The difference is that you don't have a liquidator. You have a pool, which closes positions when you run out of floor backing collateral for that position.
It's like margin.
So like margin. Yeah, at some point, you are a forced buyer. If there are a bunch of forced buyers at that point, the price is going to go up. And the reason the price is going to go up is because the pool itself, it's got this like Uniswap style formula, I think, which is like if the price goes up a lot in a short period, then that makes it's like if you have a shallower pool, the price is going to go up a lot, a lot, a lot. And so that's like this kind of reflexivity, convexivity maybe that's inside of this because the pool is the counterparty. If a lot of people are forced buying at once, that thing is going to go up kind of aggressively. That's a price movement that you should be aware of, because if you're because your on-chain stuff can be read, and then if there's a bunch of people that are sitting in a cluster and an account that is, like say some bullish news hits the pipeline, and it causes that thing to go up, what you're going to get is bullish news pushing that price straight into a bunch of like forced buyers, which then pushes the price up even more. So like
So
this is
essentially like liquidate the longs in a way.
liquidate the shorts. Yeah.
Or sorry, liquidate the shorts, right? Go up, liquidate the shorts, and then you're, pushing through
Yeah.
that level actually is what it would be.
Yeah. So if you had a bunch of people that were bearish on it, they're just directionally saying, I'm voting this one will go down. I think this will go down. They have their positions expire based on the amount of collateral that they have that's backing them at certain points. That's their negative P&L can no longer go past this thing. They must exit the game at this point. If there's a bunch of things around that point and you have bullish news that goes into that point, then you have bullish news that goes up, and then it hits this thing. It's kind of like explosive fireworks, and it's like buy pressure, buy pressure, buy pressure, and it goes like, and that's a consequence of this.
It
Yeah,
sounds like
and
a cascade in common
it
terms.
yeah, that would be a short squeeze, but it's it has to do with like the x times y equals k or something. What it has to do with like how the pool is calculating price, and it has to do with how much margin is available before that position needs to be closed. And that is a short squeeze, and that will happen, I think, because these pools are a pretty small market cap, and people have opinions, and then things go up and down because people say this is bullish or this is not bullish. So I would look at this as like a new piece of how alpha trades. Yeah, like a good alpha, like an insight, would be to track where these positions close, and if there are certain clusters around like where price could potentially reach. And then if you were trying to nudge the markets in a certain way so that it hit those positions, which then programmatically caused more buys to happen, and then close your position, you could capture profit at the expense of basically traders who were lazy about like leaving their positions open.
Right.
Yeah.
And to my understanding, if you do nothing, you will basically just decay out of margin. Your margin will just decay
Mm-hmm.
over time, right? So it's like,
Yeah.
hey, you put up this 100 tau as my
Mm-hmm.
margin. Say by day 180, example, or day 100, that's going to all be gone, right? 1%.
Yeah. So that's as I understand it, that's split into two pieces. Half of it is, I'm assuming, your settlement. How is this? How do you say that?
Well, that's the
But
closed. No,
yeah, you have like
closed.
100 tau. You can only borrow up to half of it. That borrowed half becomes the thing which then allows you to borrow and sell the alpha. That's actual alpha being sold from that borrowed half. And then there's something like that amount of tau, which is derived from that cell, that is the tau that's eaten away. And so there's a rate at which that gets absorbed by the pool. And when that's all eaten up, then that's game over for your position. So you can't just be sitting on these things, it'll tax you. And there's also no positive funding rate. The funding rate is always you're paying the pool to exist in this position. Yeah. So you can do funding rate arbitrage stuff, but you'd have to have You'd have to have a perps dex outside of this listing an alpha token that has a positive funding rate to make that happen, which is interesting.
Well,
but that doesn't exist yet because most of the alpha tokens are small and they're contained within Tau ecosystem.
Okay, let's keep going through use cases because in to my knowledge, it's quite clean cut for traders.
Yeah.
Here are the terms. Do you want the access to leverage or no?
Yeah.
It's done in a way that isn't quite, degen mode. I wouldn't say that this is something that risk parameters are out of the ordinary, right? It's like, hey, you have margin. That margin is going to decay over time as it should.
Yeah.
Almost like as the funding or the rate, and it's very Bittensor is the point.
It's pretty mild with the amount of leverage that's there. You have a capacity, and once that capacity is filled up, then I think you're done. And I'm pretty sure it works the same way for longs when that's released. So it's just like, do I think that my alpha token will go down compared to Tau, or do I think my alpha token will go up compared to Tau? And then there's a little bit of leverage, and then you make a directional bet, and then the rest kind of just happens in the background.
Yeah. Okay. I mean, I wish that we had your internet back, or I don't know if you check on it, because I'd love to see this drawn. Right. I'd love to see you articulate this as a, hey, let's go step by step. Right. You have this thing, you get rid of it, you borrow against it, whatever. That to me is how the layman can understand it any better than you just gave it to them. Let's get you out of here and into here. Boom.
We good?
Yeah, we're good.
Okay, cool.
All right, so you're here.
All right.
So what I want to do is just get a very simple baseline on this is how you're interacting with the pool.
Okay.
You should be able to share your screen, by the way.
Yeah. Give me a second and we can try it.
Yeah. And this is live, guys. Kyle, know that this is live as well, right? Give yourself time to think through things. We're here to essentially workshop in public about how we as an organization, right, Bittensor at large, is thinking about things. Okay, so let's add this scene. Now we're here. I would like to be here. Actually, no. I want us to focus on this. All right, guys. You can see Kyle's screen. We're going super simple here.
Okay. So everything exists within the pool, and that's like why this is so cool for Bittensor. We will call that pool, right? And that's the alpha tau pool, right? And then, so that exists. And then you have a deposit, which is going to be over here. And we'll call that something like this. And it looks like this is, in a short situation, this would be a tau deposit. So let's use real words. And we'll call that tau. And we'll say that's 100 tau, right, in a box. This is what I believe is called your floor. So we'll put that up here, floor.
Yep, floor.
And that just means like this is what it's backed by. And so what happens is that there's inside of here something called an LTV, which it says is approximately like this much, but it could be squeezed a bit depending on how crowded the trade is. And that's like, say, 50%. And that means you could probably actually only have like up to 50 tau of debt leverage. This is what I think is going on here. It's around 50 tau. And so that 100 tau is here, and this 50 tau right there, that's for your sort of like being eaten by the funding rate. and then this one I believe is for like settlement. And so this 50 tau right here, that goes into some kind of like mirror dimension on-chain, like money market backed by the pool, right? And this says, you know, great, I'm so glad that we have this 50 tau. I'm going to say that this right here can go over into here, and it's sort of like, all right, I'm going to apply sell pressure. Basically, how am I going to do this? I'm going to borrow first. So that's what it is. You start with this, and it says, number one, I'm going to borrow 50 tau worth of alpha, right? That's what that is. And let's move this over here. And then number two, I'm going to sell 50 tau worth of alpha. And then that's real sell pressure that's hitting that pool. And then that puts something inside of here, which is basically like your scorecard. Call that P and L. Color it like that. So what that means is when you start, right, if the price goes up, right, price goes up, then you still owe, let's say it was, I don't know how much this is, but let's suppose it was like you borrowed 100 alpha from the pool. Hello. Okay. 100 alpha. So what that means is that as the price goes up, right, your alpha is now it's worth more. But so in this case, so is your debt, because you still owe 100 here, you still owe 100 here, you still owe 100 here, etc. And so what's happening is that your debt is getting more expensive to pay back. And that is what a short sell does when it's going against you. So the other part of that, and that was this one. Oh God. The other part of that is if the price goes down, and that means your gamble was successful. So right here, the price is going to go down, right? And you owed 100 alpha. So that means here you owe 100 alpha, here you owe 100 alpha, here you owe 100 alpha. The difference is that between here and here is a price difference, and that's your P&L. So the way that I understand this is like when you close this position, it's closing off of this part, right? And that means that if you're wrong, if price goes up, you owe out of this tau. If price goes down, you get more tau right here, which is good for you. And the longer that you keep this position open is where this stuff happens. How do you say that? Whatever. This is drained consistently at this is called a funding rate in other situations. In this case, they call it a buffer, and it's basically like the longer you hold that position open, the more that's going to erode. So, what do you want to do? I would say that there's a couple ways to handle this. Let's go ahead and just go like this, and we'll do it like that. And let's make this brush a bit better. Chunk. So, number one, how can you get screwed by this? That's the important thing. Number one, hello?
Well,
Do you control narrative? That's the most important question. Can somebody else pump this or dump this beyond your understanding? That's viable. That's like that could be dangerous for you. Number two, do you hold alpha? If you do hold alpha, this can be a hedge. And hedge is really nice. Say you hold 100 alpha here, right? And you're going to get some tau out, and you put the tau into the thing over here, and you're short 100 alpha over here. You're now neutral in your exposure. And what that looks like, if we can get an actual, give me just half a second, and I'll pull in the actual subnet stuff for Zipcode, for example. Zipcode chart. We're going to go on the daily. And I'm going to just pull this.
It doesn't indirectly roast our chart.
No, it's fine. It's yeah. And so this goes in here like this, right? So if you're trading Zipcode, you know, and you're like, I hold 100 Zipcode and I'm right here, you know, and the price went up to here, and I'm like, I want to short some Zipcode. You could short 100 Zipcode in theory right here as the price goes down, and you would be technically like flat. You would not be net short, which means if some crazy news came out and it went up like this, you would not lose dollars, you would lose alpha plus the funding rate. And so like in a broader situation, you know, say you're here, got 100 here, and you're up here, and you're like, gosh, that looks a bit toppish. I'm gonna, you know, hedge it out. So what happens is like around here, you're like, all right, I'm gonna hedge and hold my hedge position. Your profit is the difference between when you turned on the hedge here, you basically sold at this value, your alpha that you borrowed through this short, and then you paid it back down here at this value, right? You have now gained more tau, and you've done that by trading against the pool that enables all this to happen. So the pool is the counterparty and the winner of all of these trades. Yeah, so treasuries,
they're getting a rate regardless, and they're never essentially losing on the trade.
The pool is, well, yeah, because the pool is the buyer of last resort no matter what. So if the pool is wrong, then it's just, it's like, actually, if the trade is correct, then the pool is like, oh yeah, good job, here's some more tau that you correctly bet that you would sell here or something like that. Like the pool is losing tau, right, if this trade is executed successfully, which is interesting from like a macro competitive standpoint of like subnet to subnet, and it kind of gets into some potential subnet warfare stuff, which like,
let's talk about this. I think this is, you talked about traders.
Yeah.
I think you kind of gave a good transition point into opening people's minds to this isn't so clean or as plain as I'm going to go long or I'm going to go short. No, this is a hedging tool. Mm-hmm. This is a financial instrument provided to you by the Bittensor chain.
Yeah.
So now let's talk about a different type of stakeholder on the network, which isn't a detail trader who we just covered. It is going to be me and yourself, mm-hmm. and the Ditto team, subnet owners, mm-hmm. and operators. How should we understand our treasuries and how we should protect ourselves as startups, because we have this highly dynamic seed liquidity, mm-hmm. or seed liquidity?
Yeah, so I would say that the most important thing in this situation is that like this tool, this like shorting tool, is actually like you've seen recently how there have been moves that have been like, if you're bullshitting us, we're going to cut off your emissions, right? Like this is like, I want to increase the quality of what these subnets are doing, and if you're bleeding out this ecosystem, then we're going to just be more aggressive and shut you off.
Expedite, right? The inevitable.
Yeah.
It's really what's happening.
Yeah. And so this thing, it's a knife in that thing. Like if you hold a lot of tau, right, and then you put that tau up as collateral. Let's try to go back here. This tau, right, at this place right there. And then we're here. There you go. So if that number is like 10,000, or I don't know how high it can go because I don't know what the caps are, but like if you hold a lot of tau, you can, through this mechanism, I'm pretty sure, borrow without buy pressure. I don't know how big that is, but like a nice chunk of the alpha that's in the pool, and you can sell it. So this is important because there's these pools, I believe, are on curves, and the curves, they look something like this, which is here's like supply, and it kind of looks a bit like that. And so if the price is going down a lot right here, because you have a shallowish pool, it sort of speeds up as it goes this way, and you can kind of push farther in the price. And so basically, if you have a shallow, shitty, low liquidity pool, and somebody comes along with a lot of tau, and you have a shitty subnet, and you're really close to like the deregistration line, you know, like somebody can come and just like, you know, sorry guys, but like I'm expediting your path toward the you know, the deregistration line.
And basically they just drain the tau pool and it would just end up in their wallet.
That's correct. So you say, these people are fucking camping on this thing. They are shitty bad actors. I'm shorting them. And then you put in your tau stake, and then you say, you hit post, and then everyone's like, oh man, these people fucking suck. I just saw a thing that said it must be true. And then you're...
Oh, dude, this is gonna, like, I'm gonna just see like the people are gonna just start dropping like flies. Like every 2 days is gonna be like, oh, fucking subnet X, whatever.
Yeah,
that's destroyed.
That's the goal. I think it's sort of like if you and you, I don't know what the rules are for how far the killing blow goes. Like if you push it down, it should be buying back up. But if you push it down and then you point out that these people are bad actors, and then they don't have a buy bid, and then it's below the deregistration line, maybe you get deregistered.
Yeah, well, there's something about when you, like, this is supposed to be for a surplus of tau in the pool. So I feel that when this is implemented, not all subnets will operate like this from day one. I feel like you will have this ability, and not conditionally based on the size of your pool.
Yeah, we should get this. Just you know, spent like an hour and a half looking into this stuff. So we should get somebody that has like much more information and have like verify, like say, like.
We talk to refs in the Church of RWA all the time. You know, helping people get on this local net. If you guys didn't know that there's a local net where you can get tokens and, you know, test trade, right, and shit test this mechanism, because it is very new. It is new in terms of how a blockchain even offers liquidity to its user base, which is insane. And also leads me to think, like, wait a minute, if there's a tau and alpha pool, and wait a minute, if I can't deposit today, but one time on a novelty search, Kant said that he's thinking about making that possible, then I can think to myself, I can sell not only the swap fees as I'm trying to understand, like, an LP is getting borrow fees and exchange fees.
That's the alpha pool, which is owned by the protocol. Right?
Owned by the protocol, but to my understanding, if that is opened up in terms of, hey, we'll allow you, this is still owned by us. We are the biggest provider, but you can come in and get a socialized yield, right, as an LP provider. You have your impermanent loss, but then your socialized yield from those fees. Like, that to me is super enticing, because what you missed while you were reconnecting was I was saying that as a founder, I have on base, let's say, I have to go spend 6 months building up a liquidity pool, right?
Mhm.
And like selling investors on the yield there and going buying a ton of aerodrome tokens so that I can Ponzi that yield over there,
Mhm.
right? And that's why, aerodromes do well.
Yeah. And Bittensor has its own built-in mechanism and also protocol loan liquidity for this. Are you saying that eventually token holders can also contribute towards that? Are they opening that up?
Right. So my understanding is that that is the direction we're going into once we also make an upgrade from Uniswap v2 to
Mhm.
what I think was referenced as a balancer v3 alternative. I mean, in a way, this feels almost like a smart pool where you have, say, 70% of the liquidity for, swaps, and then 30% for borrow lend,
Mhm.
or not borrow lend, but borrow in this
Yeah.
case.
Yeah, each trade is backed by that half that's sitting there for settlement. So it's like you can't really over leverage is the plan, because you're like, here's this chunk that will be used to for sure cover your debt if you're betting in the wrong direction. And then when you don't have any more room here, we're just taking it. Like you have to close your position.
Right.
So,
Well, there's definitely minimums in which this game becomes not fun, right? It's like, okay, you have a subnet with like barely any tokens in supply.
mhm.
Let me just like keep them in the dereg zone as they try to break out of immunity, and then I go and try to buy them. So what I'd love to do now is kind of talk a bit more about, like let's put our malicious caps on and let's get like real dirty here.
Okay.
Disgusting, right? Think in the worst way. Like, how can you not hurt somebody's subnet? How could you fuck somebody's subnet bad? Maybe as another subnet owner,
Mhm.
maybe as a vout. Who is that? And let's look through some of these use cases.
Okay. So I guess the best thing to examine is like, how is a subnet using their emissions, right? So it's like you'd have to look at like, you're receiving this many emissions. What are you doing with them? And is it productively translating to more buy side value for your token? Is your value cycling back into your token? This is like the core issue. And if the answer is yes, then shorting you is probably a pretty bad decision, because like your value, your subnet is structured like a business, and it's meant to be increasing the value of its token. If your subnet is structured like a vampire extraction tool, then like what you're saying is that this token is not worth much. You better get out before I do, and it's going to be worse tomorrow. And that's the whole like constant erosion. And then these subnets, they all have validators, and the validators all have like a certain amount of like, I'm entitled to this much, I believe, emissions. The miners are this much emissions. The owner has this much emissions. And it's like, what are these parties productively producing? If you could run an audit on all of these things and analyze the rate at which these are happening, and take a look at the prices, figure out like, are they sellers? Are these people structural sellers? When did they get their money? What are they doing with it? What have they done with it in the last few months, right? Then you'd be like, okay, it's pretty safe to say this thing is going down. And then you could make a bet. Like, okay, I think this thing should go down. That's fine. In a way to manipulate that would be if I pretended to do that. And then these like shorts stay stacked up, right? And then I like, haha, and then I like market buyed, right? And then pushed straight back through the like boom, 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 like forced sell closure. You guys were wrong. I'm really cool anyways. Short squeeze, and then like, haha, just kidding. And then sell back out. So like you pump up, you take their liquidity that was betting against you, and then you dump the chart again. And then now you have not only the stuff that you had, but also their stuff. So that's like a pretty good.
Feels like Slither. Like Slither IO, and you're like the snake, and you're trying to cut everybody off, and then you eat all of their value.
Yeah, that's what it is. It's like if I'm betting against you, right, and I'm putting up a certain stake, and that stake is like tau, right, and it's like, look, I've looked at this thing. You're a risk to the ecosystem, and I'm gonna say no. You should not. Like, I think that you'll continue to steal to drain money. And then I'm saying like, and I'm going to bet this $1,000 on it, right? Or whatever. And then you now know, because the chain is there, I think, what that number is for me. If there's a bunch that are clustered in that area, and you can also calculate how much price impact your buys are, you go up, you pop that balloon, my capital is gone, and then now you dump again, and it's like, thanks for playing. And the winner is the Tau pool and also the person that market sold. And that probably would invite a broader reprisal, which is like someone with significantly more Tau, ideally, like a king whale, as it were, who's like watching this manipulation shit happen, figures out how much buy pressure you have, and then shorts the shit out of you right here while exposing your whatevers. And it's just like, boom. And that entire way down, like that's all the value that the king whale is like re-extracting of Tau back into the system. Plus the buy pressure on the lower side is down because, you know, the emperor has like put the thumbs down on you. And so like you can't steal shit from your community anymore. Like it's like that's the whole cycle of it.
Okay. So it's really like without the fake out, right? Because that's where you get a little complicated. Mm-hmm. It's really like, hey, I have conviction that you're going to die. Subnet, whatever number.
Yeah.
I'm going to put up 1,000 Tau. 500 of that is essentially being decayed.
Yeah.
And that is essentially the ticking time bomb. That is my position. That is my P&L. It's just like constantly getting destroyed. The other half is essentially like almost like, it feels to me like an insurance of
like settlement. If I'm correct directionally, then that wins as long as the position is not opened too long. So the ideal situation is like, you know, like if I was trying to manipulate this like structure, what I would do is I would get a fat stack of Tau. I would find a legitimate reason to like character assassinate like a subnet, and I would pay to spread like a campaign of like doom, you know, on this shit. It would hit the timeline all at the same time. It would be like this person is like a fucking like, you know, like a like
child predator.
Yeah. Right. And then you and you in very bad person, and you should never buy anything that they touch again, etc. That should go down within like 24 hours, and I should close my position, take all their fucking Tau into my bags, and then wait for the opportunity to do it again. Like,
or just go the opposite way because it was all a lie, you know? And then when everyone realizes, wait, this was all a lie.
Well, I mean, that subnet will not be able to like get it up again, as it were, in the same amount, because you've taken out a bunch of their vitality, which is this like Tau. But the whale, I believe, owns that Tau now because they bet correctly. And so it's like, it's a massive way of like reabsorbing Tau by calling bullshit on like organizations. And then you're just like, wait for the next time to call bullshit and do it again.
Oh my God.
It's pretty cool.
Wow. So no, I mean, when you get the social side of it involved, that's when it becomes a bit crazy. I'm not going to be surprised if there's like investors, say like Five Girl, is a famous investor in the ecosystem, Kyle. But Five Girl will go and say, all right, I'm going to spend $5,000 or $10,000 with Bitcast and pay everybody and their AI agents of hosters to go and just spam the timeline of all of these specific community, nonetheless. And everyone's going to know why to short and why, you know, Sebi Rubino is X, Y, and Z.
Yeah.
Right?
The issue there is like, if it's legitimate, then you're kind of screwed. But if it's illegitimate and you can prove that it's illegitimate, then that person who's spreading that is now like got a bad mark, and also they're under threat for getting squeezed. So say like a bigger whale who's kind of like a cop comes in and they're like, no, that's a bunch of bullshit, and I'm gonna like market buy on this pool, like driving the price up into your shit, like die, right? And then what happens is like you push it up, they're forced to close at a loss on their thing in addition to their smear campaign. And so it's really about like, can you legitimately, like if you legitimately can see that they're full of shit and you have enough capital to like be patient about it, but not too patient, right? Like if you cannot be squeezed is the correct one, then, you know, you win and they die. If you can be squeezed, then you're in trouble. And if you lied and can be squeezed, then you're also like in trouble. And that's whales stabbing each other.
Right. Okay. This is really fun because really, I think this is what gets people's minds going about how this can go wrong, how this can go right. What's kind of obvious? What's not that obvious? What are the true mechanics of it as well? Because I don't know, when I go read something on GitHub as a non-technical person, I'm like, one, I'm not really even that familiar with this environment. Mm-hmm. Two, this is a bunch of nothing to me. Right? Mm-hmm. I want to know what like the buttons I can click, like what does the app do? Is the thing, and you kind of going back to what you had on Adobe there, you paint that picture quite well. So let's now go into the subnet owner side of things. We talked about like basically whale versus subnet. That is kind of like the thing that everyone's been talking about. But what I think a lot of people will miss is the opportunity that this brings for subnet owners to protect themselves. Because what happens, Kyle, and I'll ask you the question in this way. What happens if I understand my chart quite well right now, or whatever, at some point, right, I think we are, a little bit high, right? And I'm like, okay, this is great. I like being high up here, but I want to protect us because, we have a certain level, but, say 10, 20% of that is hype. The rest is real. It's like, okay, I kind of want to protect myself from what I know might come down or may not. So, but the point is if say I have 500K in alpha, how can I protect myself as a treasury with having the least amount of, risk?
Mm-hmm. Yeah, I think that there's two ways to look at this. And I'll talk about it from the treasury's perspective first. There's a correlation of assets. What Bitcoin is doing, what ETH is doing, what Tau is doing is an indicator of what their like higher beta, what the alpha tokens are doing, the little babies that are like riding on the liquidity wave of everything else. So when Tau is going down, right, then most of the alpha tokens will probably also go down, is like the common sort of wisdom. And like when Bitcoin is going down, when ETH is going down, all the little sort of shitcoin governance token whatevers, they'll also go down aggressively. So what treasuries have a responsibility to do is to actually be bearish on Tau at a certain time. Like Tau is a big thing. It goes up and down. It's kind of hard to manipulate, right? Because it's so large in market cap. If Bitcoin is way up, if ETH is way up, if Tau is way up, and you're a treasury and you're trying to protect your runway, what you might choose to do is open like a hedge on like a basket of things. You might even hire like a little quantity person to find the most bullshit subnets that there are out there, right? And then just open up like, kind of an open like low leverage hedge against all of it. In theory, over the next couple of months in that situation, when these things have been topish, like these are the tokens that go down 80%. So it's like if you're hedging bullshit at the top of a macro thing where Tau is up, where ETH is up, where Bitcoin is up, it's actually a responsible thing for you to do because like your treasury is denominated in a token that other people will likely go down, like market sell, because they don't want to be exposed to a broader downturn in the market. And so your treasury will shrink, your roadmap will shrink, your ability to pay payroll will shrink. And so like hedging as a treasury is like a very good thing, but it's like, everyone's really excited. They seem to think Bitcoin's going to go to 200,000. Maybe we should flatten out a bit. Like that. Like that's
is the reality check.
Yeah, that's it. And so that's one way. And then another way is like if you're you have got stakeholders, like all the subnets have stakeholders, and they're all very long alpha, but then they're like, I don't know, that alpha price looks a bit high right now. I want to protect myself because I'm really long alpha. So what your stakeholders can do is they can basically hedge out some of the alpha that they're holding, in their validators or in the whatever. And then if they're like, that alpha looks a bit much, I think I just want less exposure right now. and then that goes down 20-30% or something like that, what they can do is then like they now have, say 25% of the price change more tau, right? And if they're still long your product because you have an actual product, they can accumulate more and their validators grow in size compared to those who didn't treasury manage. And so like that's kind of like where those two places go.
Wow. So let's talk about it. I'm a treasury. I'm going to basically go do what we're about to do, which is, hey, we're gonna we have our launch soon on next week. Essentially, we have this vault that's going to be coming out and filled ideally by the end of the month. But if not, we have this vault with millions of dollars coming on the way for Zipcode. So we kind of talk about that, but we in a way know when these things are happening. Mm-hmm. This isn't a legal question, but we know when things are happening. It would be safe to say that if I were to go and market and promote and build the true business that Zipcode is, and at some point I, as the CEO and a part of the treasury with you, I go and say, Kyle, we're going to open up a hedge. We're going to protect ourselves here. We're a bit high, right? You can even see our charts done this a bunch, right? We go up, we settle down. Now we're going up, we come down a little bit, settle higher. And we can play into that. But what do I have to post in order to protect my 500,000? Mm-hmm. And am I selling alpha or opening a short, selling alpha, taking that tau, and then going short even more?
Mm. Yeah, I think it gets into like the issue is that we have an understanding, like the treasuries have an understanding of where our flows are going beforehand. And so that's sort of like you're getting into an area where you understand where the price could move because say you have like an incentives campaign and it's going to cost a certain amount of money. And then you're hedging because you have an incentives campaign. You now have like a structural advantage over everyone else that's operating in this way. And so it's like probably not a good decision for the treasury to be doing that. But if you were part of a subnet investor group and you were like, I had bought this much thing, right? And then you were like, they're announcing that this is what they're going to do. They're going to do an incentive campaign. I'm bullish on that or I'm bearish on that. You can express that opinion by hedging out your stuff. It's like, well, chances are in the short term, if they're running an incentives campaign, that means there's going to be sell pressure, like through the incentives. I'm going to hedge myself. I'm going to protect myself there. Now your investors have a way of like maintaining their position while expressing like an opinion, and that ends up like decreasing their exposure during this period where they assume the price could go down some. If they're wrong, because the incentives actually bootstrap something that causes protocol growth, which is the point of incentives, then they're going to pay for that out of their hedge because the price would then go up. Right. So it's like, it's really, the best ways are, it's like, if you're a major investor in like a protocol and you want to express an opinion to protect yourself, or your opinion is about what the protocol is doing, the subnet, or what about the broader market is doing, then you can make that opinion known. And if you are adversarial and you're like, actually, fuck that subnet, you guys are wrong, and like and I'm confident that like you've extracted that money and spent it on like irresponsible things that are not the subnet, and I don't believe that you can squeeze me, and I'm gonna fucking sit on your price until like you get down to the those are the two like major.
It really opens up a dialogue between you and like the chart at large. Mm-hmm. You really can almost like speak these sentences into your computer, and some agent will express them on chain.
Yeah. I think those are really great things. And I would say to like regular traders, these are not your games. Like, you are not a whale. Do not pretend to be a whale. If you want to play this, that's fine. The safest way to play it is buy a bag of the alpha token that you like. And when you think price has gone up a bit, just like have some tau and hedge. Don't go net short on something. Just be like, look, that's a bit high. I'm cool to wait here. I don't mind paying the funding rate. It's going to go down a bit. I'm going to take profit. Thanks. It was nice. And then buy more of your token if you want, or something else.
What does it mean to don't pretend to be a whale, right? How could somebody pretend to be a whale?
So as we described, like the real value in this is like the ability to sway the market with a certain opinion so that in a short time, like a short-term situation, your FUD translates into profit in your wallet because you're like, these people are fucking pieces of shit. This is why their subnet should go to 0. I bet a huge amount of tau on this, and I have an ad campaign showing you all the receipts. Like, this is a recipe for profit as long as that person doesn't get squeezed.
And so, getting squeezed is essentially the subnet owner going band for band with the whale.
Yeah. And like aligning with their like investors, like, no, we have to fuck these guys up, da 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 da. And so
this is gonna be so fun, dude. We have so much support, right? Like Beyond Finance has been great to us. DSV, Astrid, Bittensor, Fund One, Stillcore, all these people behind us. The community has been amazing. It's like you're basically able to have this superpower of the collective over any sort of colluder. And every time I've brought the subject up on a podcast or on this stream, I always go to that. The collective will always beat the colluder or the corrupt.
Yeah. You basically have the validator set, and it's like if the validator set is actively bleeding value out, I'm pretty sure, right? Or the
validator code, and you can say, okay, what are they validating? And then you can literally see the dollar amount that's getting bled out of the pool. Mm-hmm. And then you can essentially, I actually subscribe Travis, Tau Templar, made a really great Grafana board. Kyle, hopefully he doesn't get mad if I share the login with you, just to give him a quick shout out real quick. But what you're telling me is like this tool more than ever is very important. Now I subscribe to this. I think it's like $200 a month. It's worth it for me because I'm somebody who can go and say, all right, I want to go to where's Zipcode, cool, and I want to see Ditto, right? And I can just get rid of all. So now I can see them, but on each of them I can go in and I can see all this data. Oh no, I'm on the wrong screen now. Hold on. Here we go. So now if I click that ID, right, if you click this ID, you get into all of these things. What are the tau flows? What is the owner's wallet activity doing? How much conviction is being locked, and are they burning or are they emitting? If there's a liquidation, what's that haircut, right? How much money are people losing, right? This goes into the nitty gritty, and a lot of people have their Telegram bots and things like that go even a step further than these. But for me, I'm seeing this and I'm saying, okay, if you're a trader, you should get one of these tools and you should just live in it, whether you use it agentically or you use it personally. I think you're super behind if you're not considering everything, especially the business model. Because if somebody comes in and says, hey, the business is shit, and there's nothing to back that up, right? You can go and ad hominem me. You could say Sebi is actually a really mean guy, right? But you can also say that business is a fake business. Mm-hmm. There is nothing of value that is and will ever come out of it. Mm-hmm. And if that is a statement that has validity, you can actually almost like, you can just profit. That's it. It's like if you have a thing that you think is truth, you can express it via the chart. And if the chart's reality is that truth, because the ball doesn't lie, mm-hmm. then that's what it is. Ball doesn't lie. This is basically the expediting of whatever the ball is going to do.
Yeah. You can also probably, like if I was doing this, I would look into whatever code base is running this and try to see if I can do can I do read functions, something like that on whatever is running the accounting for this to see how much the position is, when was it started, and when is it time for them to repay if the price went up. And that's like your upward forced closures. And so if you have like a chart and you can chart out like clusters of like forced closure areas, like that's like,
if I'm sure there'll be a toggle on tau.com and tau stats app, right? I would assume if you're going to see a tau chart, You should
Maybe.
want to see that, like, what is it, a Glassnode? You can see all like the
The
liquidation.
liquidation stuff. Yeah.
Yeah.
That's what Glassnode does, but they don't have an incentive to, like, they're incentivized to share that information.
I mean, so Tau.com and, you know, Tau Stats, they want more activity. So if they give you that data, right, they show, wait, here's the levels that, you know, you're you know, you can have more conviction as a trader knowing that
cool.
the market will benefit if they go and get these other people. So if you have, say, 1,000 Tau worth of longs that will be, or shorts that will be liquidated here, and 4,000 Tau of shorts that'll be liquidated here, you're going to basically set your bids go down and then spike right up.
Yeah, the idea is if it clears that area, like these are liquidated shorts, yeah, and it goes up, and then they clear, and it's like, you know, I don't know, 100 million dead, right? Like that's a good time to express a short opinion if you don't have any faith in the underlying subnet, because you sort of like spent a lot of capital and energy trying to like get up there to violate those things. And then they're like, maybe that was all it was. I don't have any more capital. Or maybe it's like you're now positioned pretty high, so yours is way up here, right? And then it's only just you, you know? And then it sort of falls down because they spent a bunch of money trying to get it up there and they have to sell to get it back. Now you're, you know, that's a good trade for you. So like,
wow.
Yeah.
Okay, Kyle, I think we've hit a lot. I do want to go one more thing.
Yeah.
As a subnet owner, I feel scared with this type of power. I'm not joking. Like but it really is funny. I'm sitting here and I was just a guy 10 months ago. Then I became a guy with a token. Okay. And now I have this power to open a short, sell $1 bajillion worth of tokens, and people just have to trust that. I won't do that.
Well, the thing is, quite honestly, like the Bittensor system has an existing group of whales who would like to preserve the value of their Tau. And they also have, like, at a certain point, it's not really about the money anymore. It's about whether or not the legitimacy of this entire thing is valid, because illegitimacy along the way, like as in the recent things where we're turning off the emissions for stuff that's like, you know, vamping emissions out, this is like bolstering Tau's value overall. It's increasing the sort of fidelity of like your reputation as like an ecosystem. And it's sort of like, you're saying like you have good actors and you have bad actors. At some, like if you're a Tau holder and you're basically punishing bad actors and enabling good actors to use the mechanism faithfully, right? Then like your theory is that like I'm running emissions flywheels to augment like businesses that I think have a need for fuel, which can grow the value of these legitimate businesses and therefore the value of my network. And then there's a competition. Can we all be producing more high quality stuff? And then if that's the case, then you're kind of like doing this thing and you hope that the emissions that you're spending in an ideal situation are like more value is being brought into the network than what you're spending. That's sort of the goal.
The deflationary dream.
The deflationary dream. If you're going down, you need like there needs to be a knife at the throat of the, like at the bottom. And that's like, get the fuck out, like, you know, and that's like, and the reason that needs to be there is because I believe the structure is that there's like programmatic Tau, which is just being directed there, which backs the value of each of these alpha tokens. So it's like your alpha token is really just worth nothing except the amount of Tau that's in that pool, right? And what this mechanism is at its core is an ability to like call bullshit on that Tau being in the pool in the first place. And it's sort of like a superpower because you used to be able to only get that if you had the actual token and you could sell it. If you have insiders and you have like validators and you have bad actors and they fucking camp and they claim the shit, right?
Wait a minute. So you could basically to that, you know, mental frame. I didn't think about it that way. The experience of a really what is like a Tau market moderator.
Yeah.
Right. You know, you're an OG, you got a ton of Tau.
Yeah.
You're like, all right, let's be the cops.
Yeah.
This subnet over here has way too much Tau. Maybe they deserve some, but they don't deserve this extra 2,500 Tau that's in the pool.
Yeah.
What I'm going to do is short until basically what you should say is how much Tau does this pool deserve?
Yeah.
And that's the point that you close.
Yeah. This is
And then you go and return it. You take that Tau. It's with you. And then you go return that Tau to the pool of, say, Shoots and Zipcode and Ditto and Targon, and
where you are long or you think it's undervalued. Yeah,
exactly right. So I mean, you taught me this mentality. It's like go and trade, go and do stuff speculative, right, and then put it into things that you believe in long term.
Mm-hmm.
Right now, the case of a subnet's like generate revenues and then put it into the thing you believe in, which is your token. But in this case, it's the same thing, and it's more of that communication. I can give more conviction. Even if I'm not locking my tokens, if you look at my wallet activity, right, it's like a validator strategy in a way. If I'm going to sell these, I'm going to buy these every single time. So yeah, more communication from the investor to the subnet, and then really scary communication from the subnet to the investors, which is why I can now see, conviction, the chain feature on Bittensor where you can lock on a decay or permanently, is very important for this, because you really just want, like I have an excess of alpha, and I did that because I wanted an insurance so I can make sure that you would know that you have job security. That's good and all, but I really don't need the extra, say 300, 400,000. I really just need that, 30 to 50 and a crazy month, 100 on hand. Everything else is okay. I'll wait for next month. We're all here together. Let's just wait for next month. And but I'm still kind of hung up on the fact that I can just like, if I want out and I've, worked super hard and done all this stuff to like pump my chart and I can just get the hell out. That's scary because I know some people in this ecosystem will do that. Me, I'm here trying to get deeper into the ecosystem and, get more subnets and build a cohesive vision. But if you really want it out, you could just get the fuck out.
Well, that was the case. Yeah, that was the case beforehand, I believe. Didn't you say that there was like
No. Sam could have taken everything if he just went, I have 15, or it was like 5 million per subnet or whatever, a few million per subnet. I remember looking at his wallet 15 minutes before he pressed sell, because I was showing somebody the funding capabilities of Bittensor, and I see it. But what he could have done if shorting was a thing is he could have opened a short on all three at the tops or at the points, wherever they ended, and then just rugged and then taken all of the Tau from the sells and the pool for his profit.
I think they're both taking from the same pool, because the shorts settle against the pool and the sells settle against the pool. So what you're saying is you could take double, and then in that situation, you get back to that. Do you remember that chart that goes like this? And it's like what that means is like the more sell pressure and like the more egregious the sell pressure at the same time, the full stack candle of death, you know what I mean? Like that says like, I'm literally like gonna hit my head on the bottom of this pool. That's how far down my sell pressure is diving. Like it's like they're closing out with like severe slippage because they're just draining anything that's inside of the pool.
Okay, so one of those positions is just going to get totally destroyed. So really, it's just you can only do this within moderation.
You could. Well, that's not true. You could kill it. Yeah, like.
Well, you'd kill it, but there would be like that slippage.
Yeah, right. And also everyone else is fighting to get out at the same time. So it's just like if you're gonna rug, yes, this is a tool to rug better, but you can you're still like you're fighting over maybe make believe numbers like an additional like maybe 15%. I don't know, but it's like
so it's not worth it.
Well, I mean, I don't know if you want to steal money and not work in your industry again, and then like then
it's worth it.
And you believe that you won't get assassinated, then like like this.
Yeah, I mean, Sam's walking around Dubai just like with 30 million in his pocket or whatever the fuck. But so okay, Now I have a clearer take, right? There is a little bit of an extra benefit, but because of the relationship of, both, selling and shorting being part of the same pool, it really doesn't make it you just have double the profit. It's not as clean cut as that.
Because if you have just a fat stack of things and you're just going to market sell all of it, you're going to get a really bad execution. The price is going to go down. People are going to freak out. They're going to sell and try to get out. And that's why the candles go down aggressively. If you short while that's also happening, then you'd have to have like a really fat stack of like tau that you're putting on the line right there, right? Which says like, and then I guess what happens is you're saying, I'm going to borrow from the pool with this fat stack right here at the top, and then it's going to go down, and then I'm going to repay that debt. Right?
But what if it doesn't? What if you use the treasury to like go short and then you get liquidated?
Yeah. Well, if you're like the Bittensor tau cops, what you would be looking out for is like massive shorts opening, and any wallet that's connected to like the subnet owner's wallet. And if you see a massive short opening like that, you're like, oh, fuck. And you should probably, pay attention to see what's happening.
Or if you're like a trading group, right? Let's think about this. If you're a trading group, you see this super short come out from the team, right? And they don't have all their stake locked.
Just fucking sell your...
No. Yeah, if you're a group of people and you say, hey, I have a script that's going to watch this happen. If somebody opens a huge short within this proportion of their sum, I'm going to buy that shit. We're going to put $1 million in buy pressure right away and eat that all up.
That's the thing. Like, I don't have the it gets back to your collusion discussion. I don't have the confidence that like, because I don't have enough capital to make that happen. These people have like a ton of money.
I'm saying you have like 5 friends, or you have 10 friends. You're in a Discord chat.
Yeah.
Right? We're speaking Bittensor detailed groups, right?
Okay.
If you guys are essentially colluding with each other.
If it's a chat of investors and validators, right? Then the question is like, okay, can we squeeze them to their death point?
You could have a trusted stake vault that says, hey, give us a capital commitment here. We're going to do this proxy call on this money in this vault. And every time somebody, a subnet owner maliciously opens a short, we're going to take all their money. We're going to take all that alpha.
If a subnet owner maliciously opens a short and you're part of the validator set and you're colluding against them, and you know where you can pop their balloon at, and you have access to like other lines of capital to help you get there that you only have to pay X% on or something like that, then absolutely.
From Zipcode?
Yeah, like hit market and like kill them.
You said validator. Why does the validator play into this at all?
I don't really. So this is maybe where my ignorance is coming from, but I think a validator is basically like, I have a shit ton of money, I have a shit ton of tokens, and I'm so long on this token that I'm depositing all of those tokens inside of infrastructure that sits here and then holds and accrues more of these tokens. Is that how that works?
No. So there's no slashing for validators. Validators are getting all their stake from outside parties.
Is it, I believe
they accumulate it, right? The only way that validators get alpha, they're never really buying alpha except like the initial 1,000 alpha you need.
It's a lot, right?
Like $4,000. Who cares?
Oh, okay.
So it's a $1,700 with Zipcode, $4,000 for Ditto to validate. So you get that spun up, and then people are staking to you. That's really where it ends. So it's useful for the bridge, right? And that's how the CCI probably why your brain went to that. But
if you were a validator that like say you are like equity investor, yada yada, and you're buying like a bunch of Zipcode token and you want to earn on that Zipcode, then you could just take all of your Zipcode that you're allocated, put it into a validator, and now you're also earning yield on that while it's sitting there. So in my mind, that's kind of like, I'm very long on this token and I'm earning yield and I have outside capital. That's what I was imagining. Okay.
Well, I understand that. Okay. So we're about to approach, I mean, in terms of it being 4:30, it's 4:30. I want to close out with something kind of fun. I want to say it. I want to only give us like 2-3 minutes to talk about it, and I want to press end stream. because I want to give full details eventually. But I've essentially made the decision as the largest shareholder of Resi Incorporated and Zipcode. I'm pushing this decision across all current and eventual Bittensor subnets. A big tensor subnets, geez. This is 46 and 118 right now. Ditto is the other. And what we're doing is dissolving, or at least I can speak for Zipcode right now. I'm pushing this onto Ditto. That's my clarification. I can't speak for Peyton. For Zipcode, we're dissolving all of our equity. What this means is a full dedication to our token. If we're going to raise capital, which we have been starting the process of now that we have a lot of legs on our product side and investor prospects, that means that the only thing that they can buy is the token. I have come to the conclusion as I was woken up to the Venice raise with the contrast of a team I love, which is Morpho, and how they do things. And I sit here and I say, wait a minute, if any subnet, like how can I say I'm not a scam if somebody can just buy my subnet equity for X dollars and then turn off buybacks to the people who made the value? It makes no sense. It's a fucking scam. Venice can use these tokens to build the product that now does $1 bajillion a year in revenue. At any point in time, their equity company can be purchased. Their front end, their IP, their processes, their team is all being purchased, and that revenue doesn't have to go to the tokens. There's no contract that says this is the payment processor and this is the liquidity pool. Every time money goes through the payment processor, it buys tokens. There's nothing that says that. There's also nothing that says that for the majority of subnets. And as somebody who wants to really show how to do things, and not only, I feel I've done this well on marketing and how to present the business case and simplify ideas. But there's another step. How do you structure the entity? How do you structure the organization? How do you rally people? I'm kind of going a bit long on this exact subject. But Kyle, the point is here, if you have equity and you have a token, and the whole point is that the token makes the value, basically you get revenues in cash, and then you pay your vendors in tokens, and then you don't buy back those tokens or more, you're a scam, a structural scam.
Yeah. If you take a look at like a lot of the DeFi charts, actually all of them, you'll see like a very like big macro liquidity injection followed by like a long tail of death. And in situations of like, say, Compound, for example, like they're basically trading incentives for reserves.
And you're talking about Compound Finance.
I am.
Yes.
So their incentives are the comp token goes out, they incentivize the amount of money that's there, that gets translated into the reserves exist, and then companies hold the reserves, the treasury holds the reserves, and then those people politic to get paid from the DAO, and that's where those reserves maybe can go. It doesn't translate to the comp token because that would not be profitable for the people who have the ability to like make those decisions. And for a long time, especially in the case of Compound, there were like legal issues, particularly in like the last regime, right? It's like you cannot have a token that says that it's an equity because then you are now in violation of such and such. And so if the regimes have changed, if we're getting more clarity, if there's now examples of like how token and equity can be put together, basically what I'm saying is like the previous guard, as it were, they were not allowed to have equity tokens, I think, and then they took advantage of that by just using the token liquidity as like a startup coupon. And it's fun if you want to bet on a startup coupon going up and down, but it's not fun if you're a holder from up here and then your token bleeds out 80% value over the last.
It's like a sticker where you say coupon, but let's call it really what it is. You're not getting a savings on anything other than the price.
Yeah.
You basically like Compound token's a sticker, a Compound sticker. It's
Yeah.
not something that you can plug in for anything other than governance, which unless you're A16Z, it doesn't fucking matter.
Yeah, that's the collusion thing.
We are subnets for that matter, Bittensor as well. We are all networks, right? We are a sub-network, but we are still a network. Network tokens are classified or governed and maintained by the CFTC. It's a different guideline than the SEC because there should be no conversation about the fucking equity behind copper, the equity behind wheat. It doesn't exist. You just have fucking wheat. You just have memory. You just have credit products, right? You just have the thing that you are optimizing for, which is the commodity. We have these networks that produce that. I'm getting really emotional here because this is a point in my professional journey where I have basically built the case and gotten a bunch of fundraising already at, multi $10 million of valuations. And I'm sitting here and saying I'm dissolving all of that and pushing into this token that I have limited control and access to. But you know what? It's the only thing that is the truth. And although it kind of sucks for me because this big thing on paper for my net worth is just getting pooped out of existence, the end result is my network through Bittensor at large is only going to compound faster and stronger. And there is going to be no conversation of, oh, they're bad actors. They're taking our emissions and stockpiling cash and building liquidity over here and doing all the wrong things.
Yeah.
We can basically use this as a distribution tool and leave. The fuck no, we can't. Right?
Yeah.
Not do all of the right things and build in a way where our only way legally we can have legal recourse on these things is that we should, as an officer of a public company, should have legal recourse, from scamming, fraud. These should all be brought up. I'm going to leave it at that. I would love you to give a closing subject on this subject and then give your closing thoughts on long and shorting. And then we will let these lovely people be free.
Yeah, so it would be really cool if you could hold a token and it also represented equity. And I think that's where...
What does equity represent other than the promise of where buyback or revenue value is going to go and the ability to generate that revenue?
If you have a system that's operating and it's programmatically like purchasing more of itself as like a treasury strategy, and your token, how would you say this? And your token has some kind of meaningful like governance participation in how this works, could be allocating to determine like where things go, which curators are successful. These are interesting design questions. And we should absolutely explore them. And if the outcome of that exploration is that we're able to sell future emission token that has a natural vesting cliff as like a SAFT, and like instead of segregating that equity into like a separate thing and then allowing the token to be dispensable, that seems like a really good faith decision. Because then when the token arrives, it's arriving at a specific rate. The rate is determined by your shareholding of the network and your people that bought in, the investors. They're basically like injecting liquidity at a certain point. That point will over time sort of like give them a lower entry because more tokens will be released relative to the amount of money that they entered at. This information is public. People can trade against it. It's very cool. And I think that there's so many people that are like talking about this on the timeline, and they're all pointing out the same exact thing that you're saying. And that is like segregating this value out so that like, you get equity and then you sell it. And then there's an, what's it called? I'm buying your company and I'm getting your acquisition. If there's an acquisition, that's where all of the profit goes. And then it's like, well, thanks a lot, my little token holders, for helping me to get to the place where I'm at an acquisition.
I'm a huge token holder of Zipcode as the company, right? Yeah. I'm trying to basically like make this token as valuable as possible. And this whole time I've been like, thinking and like making documents and company stuff. And I'm like, what really should happen is that this company should be change its operating agreement to only exist to ensure that the IP and the revenues go back into these two structures, right? Whatever they are for the respective
Yep.
subset, and then do that. And
We
then I, as an officer, you as an officer, you're the treasurer. I am essentially the managing director. We basically come together and say, this is how shit works on this network.
Mhm.
Participate in our commodity, not our share.
Yeah, we should structure that with council and find like a good way to do that, and then make that offering to people that want to participate in the project.
Yeah, hey, here, you have tokens, lock it up. Give it to us. We're going to put it into this contract, or we're going to use the tokens as investment, right? We have a treasury. We want to build the treasury. So there's many ways that we can skin this cat, but I think that the general direction is get the F rid of all of the equity across all subnets. You shouldn't have equity. And if you do, just basically predetermine a price and make an exchange rate at that. Your safe agreement, if you signed it correctly with correct counsel, should have those terms.
Yeah.
If you have that, execute that, because if not, that's going to come out one day as one of those narratives against your subnet. And when people realize that they could spend 10 million to buy $1 million worth of revenues per year on a growing entity, by year 3, you're making 10 million a year or 4 million a year. Now it starts to make sense why there is an incentive to just buy the equity, say fuck off to the token, and win.
And this ties into the short thing, because if you have a situation where like all the value is eventually going to be accrued by the acquisition and the equity, I mean, you could just pay attention to when that equity like happens, or you could be paying attention to when acquisitions happen, and just like fat short, you know, like no more value will accrue to this thing because it's all being celebrated over here. And, you know, maybe they'll be like, yay, we're getting acquired. And then just, you know, oops, we didn't pay attention to where the value was going to go after the thing happened.
Wow. Well, we've talked about a lot, Kyle. This is amazing. I'm so glad that you came on. I know you have a lot of things to do internally with Zipcode that are like 1, super heady, 2, super time intensive, and 3, urgent to say the least. But thank you again. You're going to get to know the community. The community is going to get to know you a lot more.
Cool.
If you have anything else to say,
Nice
to say it.
Nice to do this. Thanks.
Nice to do this, guy.